Hello and welcome. You tune in to Market Fatafat with me, Ankita Saxena, and with me is Sharad Dubey. In the next 1 hour, we'll take you through the top buzzers of the day on the back of news flow or on the back of technical charts. But first up, let's take stock of the market. Sharad, what a day to start the week. Of course, that big boost that's coming in from the GST overhaul. Markets are firing on all cylinders and we're managing to hold on to those levels of 24,900.
Well, exactly, you're right. Be it Nifty, Sensex or even Nifty Bank, a very strong up move and they're holding it. It's not that there has been a very wide correction from the top, slight moderation, but look at the auto index. That's been the leader of the pack. Nifty auto index up more than 4%. Most of the gainers in Nifty coming in the auto segment, also followed by the reality, FMCG, metal and the BFSI pack as well. Also in the BFSI pack, we are having the insurance stocks. They are also buzzing in trade. Of course, the GST rationalization buzz is also there and all other details are also there. And joining us, we are having Anurag Shah. Anurag, what are the reasons for the jump in the insurance stocks today?
So, insurance stocks are rallying today in anticipation of GST reduction. And as per our sources also saying that now GST on insurance premium will be at 5%. And in some segment, it will be less than 5% also. That is the main reason. So insurance stocks are rallying today. There was a long pending demand for reduction on GST for the insurance premium, and now after the announcement of Prime Minister for GST rationalization, insurance premium is likely to attract 5% GST for health insurance, for term insurance and other line of insurance business. And but there is a catch, important catch related to the input tax credit. So if input tax credit is allowed to insurance company, then only insurance company will be able to pass on the benefit to policyholders. And without input tax credit, with the present rules at 5%, there is no ITC is allowed to insurers. So as per our conversation with a few insurance companies, they are saying that without input tax credit, it would be difficult to pass on the benefit to the policyholder. So in today's trade, we have seen that New India Assurance is also leading the rally. And I am joined by Madam Girja Subramaniam, CMD, Chairman cum Managing Director of New India Assurance. Thank you so much, ma'am, for talking to ET Now. I just want to understand from you, ma'am, how big is this announcement of GST rationalization for insurance industry?
Yeah, thank you, Anurag. Yes, it's big news for the insurance industry because definitely, especially where health is concerned, it is a necessity. And I think it's come at the right time when I think a lot of noise has been created about health insurance getting more and more unaffordable. So I think this comes as a whiff of fresh air for at least the health insurance and mid segments, MSME, and all these classes of segments of our customer base, which will benefit from this reduction.
Ma'am, previously, during your all recommendation and all, insurers were pushing for 12% GST rates on health insurance premium, but now it's likely that it will be at the 5% only. So, according to you, the input tax credit will play an important role in it?
Yes, input tax credit definitely will play an important role because that allows us to give that entire benefit to the customer. Nevertheless, this amount that is, the premium as such would definitely come down to the extent of the reduction in GST. But the full benefit of that 5% can be given only when the input tax credit is allowed for insurance companies.
Okay, ma'am. And ma'am, previously we have seen that the group of ministers has also recommended that for senior citizens, there should be complete exemption for the health insurance premium. So what are your views on that, ma'am?
I also agree because that is a segment of customers that really require health insurance. And if GST is totally done away with, then the government would have done its bit in trying to bring the senior citizens into the protection cover. I think this would be a very welcome move.
Ma'am, with the GST rationalization, do you think that a country will be able to achieve that mission of insurance for all, and the insurance penetration will increase? Because presently the general insurance penetration is at only 1% and we are at much below the global average.
Yeah, so penetration is also a very big issue because of awareness, lack of awareness, or the insurance products being missold and being looked at that way by customers. So there is a huge issue on the awareness part, but that is taken care. This will definitely help in selling the product, because anything that is sold at from 18% to 5%, if you bring down, that definitely will make the product more effective, but and more attractive also for the customer. But the point is, a larger issue still remains about how to bring in awareness, how to convince our average Indian consumer that insurance is not just something fancy. It is not something that that possibly you get cheated with at all times. It is something. It's a product that could come as an aid to you when you really need it the most, and it is totally different from any other financial product. This awareness has to come. So this GST reduction will surely help in making it more attractive, but I think that is the awareness part is more important.
Ma'am, my final question would be that now going ahead, we'll see that Insurance Act amendment also, which will be reality, because Ministry of Finance has almost worked on it, and this GST rationalization. So both, the combination of both the Insurance Act amendment and GST rationalization, do you think the combination of both will be game changer for general insurance industry and insurance sector at large?
Yes, it's just going to open up the insurance industry in a very big way. It's going to open up the distribution ecosystem also in a very big way. So therefore, with all this and the GST reduction, the price, obviously, overall price to the customer will come down. So with all this, I'm sure that insurance companies will become more active, active in the retail space, and the consumers themselves will be definitely spoiled for choice. This issue remains as to how well they get informed about it and how they make the most of the opportunity.
Thank you so much, Geja ma'am, for talking to ET Now and sharing your insights about the GST rationalization announcement by Prime Minister Narendra Modi.
Well,
Thank you.
Very interesting update coming in, Anurag, and you're giving a full 360-degree picture of the insurance industry as it stands and from the industry stalwart. Thank you very much, Anurag, for joining us and giving the questions. But let's move on with our show for Stock Fatafat. And of course, first we are joined by Sameet Chavan. He's the Head of Research and Technical Derivatives at Angel One. Good afternoon, Sameet. A great market to actually start with. And just I'd like to take your views, how the market is getting positioned. And after that, Ankita will start with the stocks.
Good afternoon. Yes, definitely a good start for this week. Overall, if you see, we were hovering around the 24,300, 24,500 kind of mark, which we were seeing as a strong support. The only thing, was lacking was some sort of momentum or trigger to go past this important resistance of 24,600. Today, with a massive gap up, we have already surpassed and stayed, beyond that important resistance marks. Now, once we see a decisive close beyond 25,000, this move is likely to extend, and probably in next few weeks we would see Nifty slowly, gradually heading towards 25,200 first, and then probably towards 25,500. And on the lower side now, any declines towards 24,700, 24,500 is likely to get bought into. So overall, yes, the positioning was good. The kind of trigger which was needed, it has already provided. Now, the next important level, as I said, once we get a closing view on 25,000, we could see a good move unfolding in the coming day.
All right, so those are the levels to watch out for in today's market. But let me get on board from our research team, Rabinder, who's also joining us. Besides Sameet, who's joined us in the technicals, we'll take you through all the stocks that are buzzing in trade. So without further ado, let's get started. The first stock that I've picked out is Ashok Leyland. Now, Ashok Leyland, remember, shares of this company were high in demand on the back of its strong Q1 FY26 results and the government's announcement for the big bank reforms in the GST regime by Diwali. Now, Ashok Leyland shares opened with a gap up opening. We saw a gap up of almost 2.5% coming in. On the back of strong results, also we did see brokerage notes that came out. Now, remember, Ashok Leyland had reported its Q1 numbers. But today morning, we had the brokerages come out where firstly, Motilal Oswal is maintaining a buy call. They've set the target price at 141 rupees. They see that the improved mix drives the margin expansion. The management is expecting the MHCV industry to post single-digit growth in FY26, while the LCV segments is expected to grow at a slightly higher rate. They also see strong order backlog coming in on Ashok Leyland, but they are maintaining a buy call on the counter, and also Avendus is maintaining a buy call with the target price of 140. On the back of that, Ashok Leyland is in focus.
Well, yeah, Ashok Leyland is in focus. Stock is up almost 8% in the trade. Summit, what are you looking for trend? That's how stock has also been doing really well based on the GST news flow coming in. And one of the top gainers in the Nifty. What are the technicals suggesting?
See, clearly all the positivity is clearly getting reflected into prices as well. As we speak, stock is trading at its all-time highs. It has already entered uncharted territory. And the kind of volume activity that we have been witnessing since morning, it says that the stock is likely to head towards 140, 150 kind of mark in coming months. So overall, the bias remains positive. It has already given a decisive breakout from its previous hurdles now. And on the lower side, 125 followed by 120 would act as a very strong support.
All right, so that's trend on the charts. But coming to you, Rabinder, you have picked out Vodafone Idea and earnings candidate. Take us through the fine print of the earnings.
Well, yes, Vodafone Idea is in focus on the back of the quarterly earning, where companies reported revenue at 11,023 crore as compared to 11,014 crore quarter-on-quarter basis, and companies' net loss narrowed to 6,611 crore as compared to 7,166 crore. And if we talk about EBITDA, then companies' EBITDA saw a downtick of 1% quarter-on-quarter basis at 4,612 crore. And if we talk about EBITDA margin of Vodafone Idea, then companies reported a EBITDA margin at 41.8% as compared to 42.3% on a sequential basis, and company's customer ARPU has increased from 164 rupees to 165 rupees quarter-on-quarter basis. So back of the good set of number in the Q1, Vodafone Idea is in focus and the stock is up more than 5.5%.
Interesting development coming in. Sameet, Apollo Tyres is in focus. What are your views for this and important levels to watch out for?
See, most of the auto counters have been buzzing since morning. So Apollo Tyres, the auto ancillary stocks have also started to show some sort of catch-up move. If we talk about Apollo Tyres, this stock has done nothing over the past 3 months. But it seems that around 430 it has formed a good base and now is challenging its 200-day simple moving average, which is placed around 460 to 465 kind of territory. So once we see a breakout, which we expect it to happen in a couple of days' time, considering the price and volume activity, we would see this stock heading towards 485 and then probably towards 495 incoming.
Interesting development in the auto ancillary space, but the cement pack that has been buzzing in trade, be it the market leader like Ultratech Cement or the other cement counters. And this is of course on the news that the GST rate slab for 28%, the cement can go down to 18%, and that's a very big up move, especially giving an impetus to infra, realty, and most importantly the cement space. And now what happens is this month itself, if you look at the numbers, they have been very stable when it comes to the pricing despite monsoon coming in. So most of the cement pack we are seeing they are buzzing in trade, be it Ultratech Cement, it's the leader of the pack, Ambuja Cement, and even Shree Cement. All kind of cement stocks are buzzing in the trade.
All right, that is the cement pack buzzing on the back of that big GST boost coming in for the cement pack. But let's move on to the next counter. This counter is not doing well in trade today, and that is Glenmark Pharma. Now, shares of Glenmark Pharma will be were down after the company reported an 86% 86% year-on-year drop in the consolidated net profit for the first quarter of FY26, even as the revenue remained largely flat and the North American business showed signs of recovery. Now, if you look at the numbers, the net profit, like I mentioned, was down 86% on a year-on-year basis at 47 crores. The revenues was we saw a slight uptick coming in on the revenue front, a 0.6% revenue uptick coming in. The EBITDA was down 1.3% at 581 crores on a year-on-year basis, and the margins also saw a downtick of 35 basis points at 17.8%. On the back of weak set of results coming in for Glenmark Pharma, that stock is tanking in trade with cuts of more than 2.5%.
Well, yes, kind of an outlier in today's market, Glenmark Pharma. But now let's look at what the management is expecting for this company. They're expecting a better second half for the year. And also they've added that they're seeing good domestic demand as well. Listen in.
See, margin, what we have seen, stabilized margin on quarter 3 onward, we should be in a EBITDA margin of 23% of the range. So, which is well on track in terms of our overall margin and the business. So, in India market, as I mentioned, that we have two strong launches in innovative oncology, which is Tevimbra and Brukinsa. Then in US, as I said earlier, is that in terms of we are hoping that respiratory launches to come through like Flovent and Fluticasone nasal spray. We have 3 additional injectable launches in Q2 in US. So in US, overall injectable launches and partner products are doing well. And Europe, DMF and Rivaroxaban, we are launching. Winlevi, we have also launched in UK. And when we are expecting 2 additional approval in respiratory segment in Europe. Emerging market, Ryaltris, as I mentioned, the Colombia and Thailand, we have got approval. And also we are hoping the approvals in larger market like Brazil and China. So overall, we have a strong pipeline. Plus we have filed for Kinavio in 15 markets, and first market launch is expected in FY26. So that's a good product pipeline for us in FY26.
All right, that's the management of Glenmark Pharma on the results. But coming to you, Sameet, you've picked out one from the auto pack. Now, the entire auto basket is in the fast lane on the back of the GST push. Escort, in fact, is also today, trading upwards of 6.5%. But do you see this positive momentum to remain intact going ahead?
Looks like, at least from today's price and volume activity, stock has been oscillating within a range of 3,600, 33,000 since last 4 to 5 months. And today we are seeing a decisive breakout happening from a sort of triangle pattern with humongous volume. So that seems that the stock is likely to come out of its recent slumber phase. And from here on, if we have to see another couple of months, we will not be surprised to see the stock heading towards 3850 and even can touch the 4,000 mark. So overall, the bias remains positive. On the low side now, 3,400 followed by 3,200, 3,250 should act as a very strong support.
Well, this is the second pick from the auto sector coming from Sameet, but moving on to earnings. And Rabinder has the earnings for Borosil. Rabinder, how's the earnings panned out for Borosil? Largely inline set of numbers initially.
Well, yes, Borosil is in focus on the back of their Q1 earnings, where company's revenue saw an uptick of more than 5% year-on-year basis at rupees 233 crore as compared to 221 crore. And if we talk about net profit, then net profit also saw a good jump of more than 87% year-on-year basis from 9 crore to 17 crore year-on-year basis. And EBITDA also saw an uptick of more than 11.5% year-on-year basis from 33 crore to 37 crore. And if we talk about EBITDA margin, then company's EBITDA margin has increased from 15.1% to 16% year-on-year basis. So back of the good set of number in the Q1 FY26, Borosil is in focus and stock is holding a gain of approx 1%.
All right, moving on then to the next counter that is in focus, and that is M&M. Now, M&M has launched a BE6 Batman edition, the world's first commercially available Batman-inspired SUV that's priced at 27.79 lakhs. Now, the booking opens on the 23rd of August. And also, the second part of the news is that Mahindra has unveiled the global Vision 2027 that showcases 4 of the world's leading SUV design concepts based on modular multi-energy NU-IQ platform, and Mahindra's new generation of SUVs based on the NU-IQ platform that is set to launch starting 2027. On the back of these two launches, M&M is in focus today. In fact, like the entire auto pack, M&M also is trading upwards of 4.5%.
An interesting development for M&M, but there is an important development coming in. Rajesh Jejulkar, the ED and CEO of Auto and Farm sector, spoke the possible impact of the GST reforms on the auto sector announced by PM Modi. Listen in.
Well, we'll leave the government to take their decision on what is the right rate of GST for our product category. But the one thing I would say is there's a great opportunity to make automobiles in India for the world. And that opportunity is best leveraged if the size of the Indian market keeps growing faster. And India is still a very under-penetrated auto market. Less than 8 or 9% of the households in India own a car. So there is a huge upside. And the auto industry has a huge GDP multiplier. Is when auto manufacturing goes up, it adds jobs in the supplier ecosystem, it adds jobs in the front-end dealer ecosystem. So there is a huge multiplier effect of an auto growth story. And when that auto growth story can create global platforms and global products, because you make more in India for the Indian market as well as export, I think this sector has the greatest ability to create impact on the growth story really. So let's say we hope for the best, but we leave the best decision for that to the top.
So yes, indeed, it is a welcome move, Rajesh. But along with that, what cut do you believe can really boost the affordability?
Yeah, so India is a price-sensitive market, and hence we always try to keep our products well priced. It's also a market in which customers do look for new technologies. So customers are very knowledgeable, very evolved, and if we keep price points affordable, it's going to lead to category growth. So let's hope for the best.
All right, moving on, coming to you, Sameet. You have also picked out M&M for us on the charts. Tell us, what do you see in the charts for this one? In fact, M&M is one counter that has been an outperformer from the auto pack. Do you see that momentum to stay intact?
Yes, I was about to say that this has been one of the rank outperformers within the auto space. In the recent times when we saw most of the auto stock struggling, this stock was making new highs. Stock seems to have entered an uncharted tree again, and now from here on, will not be surprised to see the stock heading toward 3,600, 3,800 over the next couple of months' time. Overall, the chart structure looks extremely robust, and any decline from current level probably towards 3,200, 3,250 would make it an attractive risk to reward bid. So, from a short to medium term point of view, we see a very strong base around 3,000, 3,050 for this spread counter.
Strong base coming in for M&M. Stock is up 4.5%. But India's Independence Day was celebrated in US as iconic landmarks, including World Trade Center, were illuminated in the colors of the Indian tricolor. The Indian Embassy in the US hosted celebrations. Seattle's Indian Consulate marked the day with great fervor. Times Network also celebrated this Independence Day in the US. Here is a glimpse of it.
Right, those were the Independence Day celebration abroad. But with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we're getting you more buzzers on the other side. Stay tuned.